Welcome, dear traders. You're watching a recap of the Asian session. After logistical trading on Wall Street yesterday, Asian stock markets kicked off Tuesday with losses. Only Japanese stock indexes managed to rise slightly following the GDP report. Asian benchmark indexes dropped due to fears of new rate hikes by central banks after the Reserve Bank of Australia unexpectedly hiked the key rate this week. The Bank of Canada did likewise yesterday. It means that the global tightening cycle is not over yet. Investors are concerned that the Fed could also make a hawkish move. Its final decision will mainly depend on inflation data, which was on tap on a Tuesday and Wednesday next week. The majority of investors believe that the regulator will keep the key rate unchanged on June 14. However, according to the FedWatch Tool, more than 50% of speculators are factoring in a rate hike at the next meeting, which will be held on July 26. The US dollar is facing bearish pressure amid uncertainty over the Fed's move on the key rate. Moreover, traders have already priced in a rate increase, at least partly. If the Fed brings the interest rate higher, the greenback is likely to start a steady rally against other currencies. These are only assumptions. In the Asian session on the US dollar was consolidating at 104 points. It was fluctuating in the bearish range of 103.90 and 104.10, and the next support level is located at 103.40, the monthly low of June 2. The resistance level is now 104.70, the high of May 31. The US government bond yields also stabilized early Thursday. For example, two-year notes, which are most sensitive to changes in monetary policy, jumped yesterday. After the unexpected rate decision of the Bank of Canada, they climbed to 4.6%, and yet in the Asian session they fell to 4.5%. In a global markets, demand for the US government bonds is declining, and the recently adopted bill to raise the debt ceiling means that the central bank will issue more bonds worth over $1 trillion. When they are issued, volatility may rise sharply. A rise in the US government bond yields usually undermines the upside potential of the yen. As a result, last night the dollar-yen pair crossed the psychologically important level of 140. After that, the pair lost its bullish momentum and moved to a steady decline. While the greenback is stuck in the sideways channel waiting for the new drivers, the yen has already advanced to 139.7. Although the pair may rebound above 140 again, it will hardly break through the resistance level of 141. In the short term, the support level for the pair is seen at 139.50. In the case of a further pullback, it will shift to 138. A further trajectory of the pair will mainly depend on the Fed's rate decision and the movements of the Treasury notes and the US dollar after the meeting. In the morning, the pair reacted to Japan's economic data, and Japan's GDP for the first quarter was revised sharply higher to 2.7% in 2023. The economy continued to recover, showing the highest pace of expansion since mid-2022. As a result, the quarterly GDP indicator grew by 0.7% compared to the previous period. Australia also revealed crucial data. In April, the country's trade balance fell to 11.2 billion Australian dollars. At the same time, imports increased, whereas exports dropped. Retail sales slid by 5% compared to the previous months, and the total volume of exports to China, Australia's largest trading partner, decreased by 15.4%. For the Australian dollar, these reports are rather negative. It was expected to go down, especially amid drop in oil prices. Despite all these factors, the Aussie showed a steady increase, moving in the range of 0.6652 and 0.6692. Apparently, the bullish momentum bolstered the Reserve Bank of Australia's rate decision, and the hawkish comments of Philip Lowe is still strong. Besides, the US dollar weakened today, and despite cautious sentiment and falling commodity prices, the Aussie touched 0.6688 in the morning. The New Zealand dollar also grew today amid external factors and the consolidation of the greenback. The Kiwi was steadily drifting away from the weekly low of 0.6050. At the end of the Asian session, it was trading at 0.6075, and the Kiwi dollar pair was moving in the upward range of 0.6032 and 0.6081. It's likely to advance higher. And that's all for now. Hit the subscribe button and keep close tabs on the market developments with us. And see you soon.